Picture this. You've just bought shares in a company heavily shorted by Wall Street, when suddenly, like a rocket ship, its stock price takes off, as those who were hoping for its demise scramble to cut their losses. In the investing world, we call this a short squeeze. And fortunes can be made overnight for investors who are on the right side of the trade. And today, we're not just going to explain how it works, but also reveal one of our favorite potential candidates for a short squeeze. So, make sure to stick around until the end of the video to find out which stock we believe will soon prove the bears wrong. But what exactly is a short squeeze? And how can it result in such mind-boggling rallies? In simple terms, a short squeeze occurs when a stock that has been heavily shorted suddenly starts rising sharply. This forces short sellers who had bet on the stock's decline to buy back the shares to cover their positions before their losses get too big. This buying pressure, in turn, drives the stock price even higher, leading to an explosive short squeeze. Now, if you think this sounds like a risky game of chicken where hedge funds and retail investors stare each other down, waiting to see who blinks first, you'd be right. High risk? Absolutely. High reward? Potentially. Remember, those who short stocks aren't doing it on a whim. These are often hedge funds or sophisticated investors who have conducted detailed research and believe the company's fundamentals and growth prospects are weak. But sometimes, these short sellers get it wrong. If a heavily shorted company turns out to be financially robust and exceeds revenue and earnings expectations, short sellers might have to rush to cover their positions. This can create buying pressure and potentially trigger a short squeeze. But let's not kid ourselves. Investing in heavily shorted stocks is risky. High short interest could indicate that informed investors expect the company's condition to deteriorate rapidly. However, a significant short interest could also set the stage for a dramatic short squeeze if the company delivers robust results. Over the past few years, we've seen some dramatic examples of short squeezes. GameStop and AMC, now dubbed as meme stocks, became the poster children of short squeezes, inflicting heavy losses on short sellers while delighting investors who were on the right side of the trade. And this year, a similar pattern seems to be emerging with several other stocks. In today's video, we'll look at these intriguing scenarios and why short squeezes might be more common than you think. And, as we promised earlier, we'll reveal one of our top picks as a potential short squeeze candidate. What's fascinating is that this company has solid financials and has been beating analyst estimates. So stay tuned until the end to discover which company could potentially send the bears running for the hills. But before we jump in, a word of caution. Investing in stocks with high short interests is very risky. Always remember to perform thorough due diligence before making any investment decisions. Now, with that out of the way, let's dive right into the meat of the matter. Now, let's take a look at some of the stocks that have been in the crosshairs of short sellers recently. Take Carvana Co, ticker CVNA, an e-commerce platform for buying used cars. It's been heavily shorted, with around 47% of its float sold short. The bears were betting against it, but the market had other plans. Carvana stock has seen a jaw-dropping rise of about 1,000% this year. It wasn't a smooth ride, but it's been incredibly rewarding for those who held on. Then we have Upstart Holdings Inc, ticker UPST, a cloud-based artificial intelligence lending platform. Approximately 37% of its float has been shorted. Despite this, Upstart's stock value has seen a meteoric rise, increasing by more than 400% year-to-date. The stock's solid performance shows that sometimes, short sellers might misjudge market sentiment toward a given company. C3.ai Inc, ticker AI, a leading AI software provider, has also been in the crosshairs of short sellers, with about 34% of its float shorted. Nevertheless, its stock has risen more than 250% year-to-date. But among these stocks, there's one that we've been tracking closely, and we believe it has significant potential: SoFi. This fintech company we've extensively covered on this channel has about 15% of its shares sold short. While that might not seem like a lot compared to others we've mentioned, it's substantial. Based on recent daily traded volume, it would take shorts more than 3 days to cover their position. And here's the exciting part: SoFi has recently posted some strong results. The stock soared by nearly 20% on July 31st as it released its Q2 2023 financial results. If they continue to deliver such stellar performances, it could lead to a short squeeze, propelling the stock price to new heights. Now, it's important to reiterate the risks here. Not all heavily shorted stocks will experience a short squeeze. It's a high-risk, high-reward scenario, so it may not be suitable for all investors. There are good reasons why a stock might be heavily shorted, and those reasons shouldn't be ignored. These stocks attract short sellers for a reason, often because they believe the company's prospects are deteriorating. As we draw this discussion to a close, remember that investing in heavily shorted stocks is not for the faint-hearted. While the potential returns can be substantial, so too can be the losses. It's a high-stakes game, and not everyone walks away a winner. Therefore, before you decide to jump into the fray, make sure you do your homework. Understand the company's fundamentals. Examine its financials to discover the reasons behind the high short interest. And most importantly, assess your risk tolerance. As always, we're here to shed light on these exciting and complex topics. But remember that we're not providing direct investment advice. Our mission is to empower you to make well-informed decisions on your journey toward financial freedom. And while short squeezes can create compelling investment opportunities, they're not without risk. So always make sure your investment strategy aligns with your financial goals and risk tolerance. Are there any heavily shorted stocks you're keeping an eye on? Do you have any experience with short squeezes you'd like to share? Please drop a comment below. We always love to hear from our community. Before we wrap up, let's revisit SoFi, our potential candidate for a short squeeze. SoFi has been on our radar for quite a while now, and for good reason. It's a robust fintech platform, and it's been posting impressive results. Could it be the next big short squeeze story? Only time will tell, and you can bet we'll be here to cover it. If you found this video helpful, please give it a thumbs up and share it with your fellow investors. If you haven't already, hit the subscribe button to stay updated with the latest in the financial world. Until next time, keep investing wisely